We're going to start today's video with a little talk about everybody's favorite darling stock, Apple. And again, Apple has been in a downtrend for a long time, and for some reason yesterday, maybe it was the Barron's report over the weekend that finally got everybody on the retail side all excited. Again, the magazine indicator, when the press starts talking about how bad things are or how good things are, is usually the best time to fade the masses. And again, Apple had come from $705 just a few months back down to $483. So we've been in this bear market. This new move has been, or rather, this push below 400 or 500 that we saw yesterday was nothing more than really a final puke in my mind, for at least for the interim. I could see Apple again trading back to 520. That would be more of an interest if you hadn't been short from 700 or the high 600s. Markets don't go straight down. There's no doubt that Apple is going to go further down. As a matter of fact, in my charts, I'm targeting 350 at some point. I'm not saying that's going to be tomorrow or next month or maybe 3 months or 6 months or a year, but it will trade to 350 over time. But any bounce that Apple gets at this point, and again on the profile you can see it very wide here. It was getting to an area where it was do or die. If it didn't hold this 485, it very quickly would have traded to 430. So the next time it breaks 485 will be the next time that it moves to 430, but until that happens, this was the game plan was pretty simple. We're going to bounce, and we're going to bounce hard just like we are today. Apple, again, is up almost $20, 3.5%. That is responsive, reflective, because everybody that got short yesterday at that 500 number, just because we closed under it, it was the old even number game. It was the first time Apple had closed under 500, so all the late shorts got into the game at the wrong time after a move that had already been expired happened. And all this is going to do, this is false buying, but again, there's a big magnet up here at 520 on an hourly chart, moving considerably higher. If you take the fib line from 700 to 480, you're looking at $220. This thing could easily go up another $120 to the 600 level in my book, and wouldn't surprise me. It got so negative out there, and again, that was the time yesterday. As long as that 585 held into that 485, excuse me, that was a time probably to look at buying some calls, because everybody and their mother were running to the exits, selling. Retail got bagged, tagged, and now everybody that got short on the retail side is getting bagged and tagged, and that's why we're going to go up for a little bit here and squeeze out all the amateur shorts in Apple. So that's the way we're looking at it. Again, this wasn't a new move. Just for the last 3 months of this chart, we'd gone from 630 to 480, so that's $150 right there. Halfway move on that gets you to about 550. 60% retrace gets you right again to that big magnet on the 3-month price action, somewhere around 570. So look for a continued move up. Again, I wouldn't be looking to press Apple unless it broke 485 on a close right now, unless it trades much higher.